BigBear AI stock is currently trading at $3.98 during this Friday, May 1st, 2026 market session, reflecting a solid 4.19% move to the upside. While the broader market is watching the tech giants, a massive amount of institutional eyes have silently shifted toward this specific ticker over the last 72 hours. Most retail investors are looking at that price and seeing a small-cap company struggling to regain its late 2025 highs. But the reality is that the underlying structure of this trade has changed fundamentally. Just this morning, the intraday high touched $4.03, and the volume is starting to tell a story that the surface-level price action hasn't quite admitted yet. While you might see a stock that is still down significantly from its 52-week peak of $9.39, the smart money is positioning for a massive volatility event scheduled for next Tuesday. The expectation in the market right now is that BigBear AI is just another speculative player in a crowded field, likely to struggle with the same contract lumpy nature that saw their revenue dip in late 2025. However, the reality is that the company has quietly executed a total overhaul of its balance sheet. We are talking about a reduction in debt of more than 90% and the settlement of nearly $125 million in convertible notes. This isn't just a corporate cleanup, it is a defensive moat built at the exact moment the sector is starting to favor survival over sheer growth. When you look at the Schwab Intelligent Portfolios or other online investment tools, they often filter for these kinds of fundamental shifts before the price reflects the change. This creates a rare window where the narrative of a struggling startup is clashing with the reality of a lean, cash-rich entity prepared for a major pivot. Most people using investing sites right now are looking at the trailing 12-month losses and walking away. They see the negative net margins and think the risk is too high. But if you look deeper into the institutional activity, firms like Vanguard and Goldman Sachs have been aggressively expanding their positions. Goldman, for instance, boosted its stake by over 500% in the first quarter of this year. Why would the most sophisticated players in the world buy into a stock that looks technically broken on a long-term chart? The answer lies in the expectation versus reality gap of their recent acquisitions. The integration of Ask Sage and CargoSeer isn't just about adding headcount, it is about securing a position in regulated generative AI for the defense sector, a niche where competitors like Palantir and C3.ai are fighting for every inch of ground. If you are using a Robinhood trading platform or a SoFi active investing account to track your individual brokerage, you've probably noticed that the options activity for BBAI has exploded. Call volume jumped more than 70% above typical levels this week alone. This suggests that a significant group of traders is betting on a massive breakout during the May 5th earnings call. They aren't just looking for a beat on the top line, they are looking for evidence that the 2026 revenue guidance of $135 million to $165 million is not just achievable, but conservative. Comment below how many shares of BigBear AI you currently hold, or if you think the recent increase in authorized shares is a sign of an upcoming merger or just a safety net for future dilution. This kind of engagement is what separates the casual observer from the serious participant in these small-cap moves. When you look at the technical setup, the stock is currently fighting a key resistance level near $4.50. It has been trading above its 20-day simple moving average but below the 100-day hurdle. This split indicates a fierce battle between short-term buyers who are seeing the value and intermediate sellers who are still underwater from the 2025 drawdown. However, the accumulation patterns on Interactive Brokers and Fidelity trading platforms suggest that the selling pressure is beginning to exhaust itself. The short interest is still hovering around 26% of the float. In a stock with this much institutional backing, that is a recipe for a massive short squeeze if the earnings numbers even slightly exceed the modest expectations of $33.6 million in revenue. Let's talk about the business model for a second, because that is where the real authority is built. BigBear AI isn't trying to be a general-purpose AI company. They are laser-focused on national security, supply chain management, and digital identity. This is a high barrier to entry market. You don't just walk into a Pentagon contract, you earn it through years of clearance and specialized performance. The market expects these government-weighted revenue streams to be volatile and unreliable. The reality is that once these programs become programs of record, they turn into multi-year, predictable cash flows. The company's recent move to double its authorized shares from 500 million to a full billion might look like a dilution threat, but it also gives them the firepower to acquire more specialized tech and fold it into their existing government relationships. If you are managing your own portfolio through self-investing or using investment help from a professional wealth management service, the focus is usually on risk-adjusted returns. The risk here is clear: contract timing. If a major Army program gets delayed by a single quarter, the stock gets punished. But the opportunity is equally clear: a valuation that is currently trading at a significant discount compared to peers in the IT services sector. While Palantir trades at a massive premium for its growth, BigBear AI is being valued more like a traditional consultant, despite its proprietary AI stack. This valuation disconnect is exactly where the expectation versus reality framework creates the most profit for those who can see through the noise. Using a Fidelity mobile app or interactive broker's account to monitor these daily swings can be exhausting, but the recent trend of higher lows since March suggests a base is being built. We saw the stock slide from $6 in mid-January down to the $3.70 range, but it has refused to break below that floor even when the Nasdaq faced headwinds from OpenAI revenue concerns. This resilience in the face of broader sector weakness is a classic sign of internal strength. Institutional accumulation doesn't happen in a straight line. It happens in the shadows while retail is distracted by the latest headlines. The outlook for the remainder of 2026 hinges on whether management can translate their cash war chest into sustainable, scalable products rather than just one-off consulting gigs. They ended 2025 with the strongest liquidity position in the company's history, giving them the freedom to invest in growth technologies and talent. The market is waiting to see if this capital will be used to fuel international expansion, specifically in their UAE partnerships and airport security deployments. If those catalysts hit, the current $4 price point will look like a distant memory. In summary, the trade on BIGBEAR right now is a bet on a fundamental transformation that the market has not yet fully priced in. The expectations are low, colored by past revenue misses and the volatility of the small-cap AI sector. The reality is a debt-free, cash-heavy company with deep institutional support and a massive short interest that is vulnerable to any positive news. Whether you are using Robinhood stock trading, SoFi Invest, or a more traditional Fidelity brokerage account, the key is to watch the $4.50 resistance level. A clean break above that on high volume would signal that the repair phase is over and the next major leg up has begun. Authority in the stock market comes from understanding the difference between what everyone is saying and what the data is actually doing. Right now, the data is pointing toward a company that has survived its leanest years and is now positioned to capture a specialized piece of the most important technological shift in a generation. The tension between the narrative of a struggling penny stock and the reality of a key defense contractor is where the most significant moves happen. Keep your eyes on the volume and the institutional filings, because that is where the real story of BIGBEAR is being written. The upcoming earnings report on May 5th will be the ultimate test of this thesis, and the market is currently leaning toward a surprise that could reset the entire trajectory of the stock for the rest of the year. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, outshare with your friends, bell subscribe for more updates.